My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. I'll be one of my friends. I'm just trying to make you some money. My job, not just entertain, educate, teach you. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. You know how the averages hit new all-time highs like they did today? Dow gaining 115 points, S&P advancing 0.37%, NASDAQ climbing 0.56%. I'll tell you how it is done. I'm going to tell you. See, the market reached unheard of levels by triumphing over the concerns that caused money managers to stay on the sidelines, waiting for lower prices so they could buy lower prices that never materialize. You'll often hear that we climb a wall of worry to get to these exalted levels. But today we didn't just scale the wall. We breached and busted through minefields, force fields, and cauldrons of boiling oil. This is a quiet bull market. No champions, no supporters to speak of. That's why tonight I want to go over some of the obstacles that we've overcome, because this list is pretty darn amazing. And the fact that no one, okay, maybe outside of our president on Twitter, seems to be celebrating is downright ridiculous. Challenge is conquered. That's what I call a graphic. All right, obstacle number one, impeachment. Now, I told you that impeachment wouldn't matter. The stock market won't win. That's based on what we saw with Bill Clinton. Any weakness was a buying opportunity, not a selling one. But it's still impressive that we have a sitting president who's incredibly pro-business. And the House Democrats are trying to take him down. And the stock market's just ignoring the whole process. Maybe they should impeach all presidents. Seems to work out well for the averages. Obstacle number two, recession fears. While it is true that job growth isn't quite so fast as it was a year ago, it's still very robust versus the historical norm. But over the summer, the yield curve inverted, meaning long-term bond yields dropped below short-term bond yields, and all sorts of commentators told us that an inverted yield curve is an irrefutable sign that we're headed into a recession. At the same time, I told you that was complete nonsense. We only got an inverted yield curve because the Fed tightened too far, too many times last year, screwed up. And I explained that the problem would go away as the Fed continued to cut rates. Still, you had tons of investors freaking out, just freaking out by the endless chatter. I heard it all day. I read it all night about how an inverted yield curve equals recession. You can't afford to take this stuff seriously. These people will keep you in your chains. I think part of the latest run has been accomplished because these panic sellers, they capitulated. And then they came back to the stock market as they watched the yield curve uninvert before our eyes. And when you do uninvert, by the way, spell check hates it. It keeps coming back different thing. You have to do un-invert. There's a little factoid. Third obstacle. We had worries about inflation and how the Fed might need to stamp it out. I say worries about inflation as opposed to inflation because we don't have much in the way of actual inflation. We just have lots of so-called experts. How many times? The so-called experts. I mean, I want to wring their necks. I mean, how can they be so wrong? Can't believe that the labor market can be strong without causing rampant inflation. That wasn't one of those. I took that class. Class was wrong. Now, this hasn't happened because in the new economy, we have all sorts of deflationary forces keeping prices in check. Like Adobe tonight, which just raised guidance. They are like just a deflationary monster. Or the big box retailers. Watch, that's Walmart, Amazon, Target, Costco, Home Depot. They're strong-arm suppliers to the cloud-based software companies that save with labor. Yeah, you can fire a lot of people with some of that stuff. Well, downsize. Obstacle number four. Tariffs. If you listen to most economists, they'll tell you that trade wars are devastating to economic growth. Starting a trade war is supposed to be a great way to cause a recession. But the reality is a lot more complicated than that, which is why our trade war with China simply hasn't done much damage here. Yeah, sorry, you got to admit it. Hate him or like him, hasn't. Our economy has absorbed huge tariffs, yet most of our fears haven't come true. Meanwhile, American companies are fleeing from China left and right, making their goods in other countries to avoid the tariffs. We still import a huge amount of stuff from China. Don't doubt that. And some businesses have really been hurt. Hey, we're going to hear one later. Not really been hurt, but you'll get the whole scheme of things. But for the most part, there's been a lot less pain than the experts predicted. Incredibly, the companies that are supposed to be hit the hardest, those big industrials, they have stocks that have been helping to lead the whole charge higher. Think United Technologies, Honeywell, Illinois Toolworks, Emerson, Caterpillar. Those stocks are flying. Fifth obstacle, the risk of owning individual stocks because of company-specific woes. And boy, did we have them today. Kind of an embarrassing day, if you ask me. Today we saw the stocks of two high-quality companies get crushed on some very bad news: McDonald's and Under Armour. McDonald's, which is up in the same town as the Chicago Bears, which are also embarrassing, just lost its CEO, Steve Easterbrook, because he had a consensual affair with a subordinate. Easterbrook's the turnaround artist who gave McDonald's a new lease on life. Wall Street loves him. Stock's up nearly 100% under his tenure. Now the new chief, Chris Kempczinski, has taken over. He's a bit of an unknown. I don't know this new guy. I mean, I do know that historically McDonald's had a real strong bench, and I'm not going to hold Easterbrook's ill-advised behavior against this great American institution. In fact, I actually think, get this, I'm the only one who's been saying this, it's been rocked. The stock's been rocked by slightly weaker same-store sales domestically. Wendy's breakfast, which is coming out. I think down here, you know what? The stock was at 221. I think you buy it. And maybe you buy it tomorrow after some people downgrade it. I'm betting the risk is starting to get baked in there. Under Armour's much harder. Although the Baltimore Ravens won big against the Pats. They're from Baltimore. Anyway, the company just cut its forecast on the same day that we found out the Justice Department and the SEC have investigating its accounting practices. On one hand, Under Armour has a plan to turn things around, and it's doing much better than it was when it comes to the balance sheet and the inventories. That's just true. On the other hand, there's powerful, deep-pocketed competitors like Nike and Adidas has to deal with fickle consumer. As far as the accounting scandal, let me give you my view. As bad as it sounds, I believe there are no revenue recognition issues. And those are the kind of things that really lead to severe consequences. I'm actually taking them off the table. I don't want to give you any false comfort here, but let me just say I'm far more worried about the turnaround than I am about the integrity of Kevin Plank and his enterprise. I wouldn't be surprised if the accounting issues actually blow over. If it were really bad, you know what? I don't think the government would even allow them to report, let alone issue a forecast. However, I can't recommend being a buyer here yet. I don't want to be a hero. My discipline says that both the accounting irregularities and the issues with the sales have to play out a little more. Meanwhile, we've got more accounting issues from Twilio, the once red-hot cloud stock. This thing has been twice hit by problems, and they're trickling out. That's the worst way. I've stood behind Twilio for ages. Now I look naked as a jaybird. What is a jaybird? My wife said I was naked as a jaybird. What does that mean? I've never seen a jaybird. Is that like a blue jaybird? Just something to ponder. Okay, Twilio is owned by the Charitable Trust, and boy, do I feel stupid. And we got to find out what the hell's going on here because, man, this is one Nastola situation. And these are only the latest offenders. We've been dealing with the dire situation at Boeing caused by their negligence that led to the 737 MAX crash, but they're starting to talk about it on every single show. Check that. Okay, yet somehow Boeing stock is up 9% for the year. Hey, we've watched General Electric flail around for ages. I think both will eventually recover, but it's not going to happen overnight. There are a host of other companies in the wall of worry. I mean, how can we not be... companies, issues, Trent, Brexit. I mean, how about that? I mean, that's chaos, right? How can Wall Street not be afraid of Senator Elizabeth Warren, who increasingly seems like the front runner in the primaries? Money managers are terrified of her because she wants to raise their taxes. And, of course, there's pure valuation issues. Many stocks like Apple have overrun their price target. Then this evening, we've got we have Uber going down again. I mean, what is that? There's that unicorn issue. But here's the bottom line. These obstacles are exactly what makes a bull market thrive on. They cause investors to go negative, and then as the averages rally, these same people come back in at higher levels, sending us still higher. These are the people, by the way, who trade Apple. Remember what I say about Apple? What do I say? Right. Okay, the panic money managers, they represent the fuel that this market needs to go higher. And right now, this rally, it's got fuel in spades. Okay, why don't we start with Jared in Tennessee. Jared.
Hey, Mr. Cramer, how are you?
I am good, Jared. How about you?
I'm fabulous, man. I just want to tell you I'm brand new to trading, and I watch you every day, and I look to your guidance, and I just want to tell you thank you, first of all.
You're quite welcome, Jared. I'm glad you're aboard because there's money being made. I'm not to say that money's being made, right? Is that against the law to say that? No.
I was just going to say that's what I'm saying. I'm ready to make some money. I'm new to it. I'm excited.
Okay. I like this call. Go ahead.
Awesome. So I'm new to trading, but I had a hunch. QSR, Popeye's Chicken, looked back at it in August. It looked like they jumped $9. So I've been playing options. I'm wondering if it's a smart idea to bet on it going up maybe $5.
Okay, listen there, young lad. Okay, I think you should be investing, not necessarily trading options. Quick service, that's Burger King, and that's a Popeye. Because they got a chicken thing doesn't mean that they're going to beat the numbers. I want you to be a little more careful, though. The Impossible Burger, by the way, they kicked out the Morningstar. The Impossible's going nationwide, and let's understand each other. That's got GMOs. So, yeah, I'll sanction some option trading, but don't forget to invest, too, because you got your whole life ahead of you. You can buy some of those speculative stocks. I like your attitude, though. Let's go to the governor. Let's go to Phil in New Jersey. Phil.
A big Philadelphia Eagles booyah, Jim. How are you?
I am doing fine. I'm telling you, we made the Bears look, the Bears look like the guy who used to run McDonald's. Go ahead.
Only if the Phillies could do that, it'd be nice, wouldn't it?
Yes.
But maybe someday. But I have a question for you, Jim. So I bought Estee Lauder, right? It's 12% off its high. I bought it before earnings, and I bought a little bit after earnings.
Okay.
The stock keeps continuing to go down. I don't know what's causing this thing to plummet down. I'm just wondering if I should just keep it.
I want you to keep it. I mean, what's happened is like the Procter & Gamble's, all the stuff that is recession, like Procter & Gamble's down $4.80. This is because people were not going into recession. Now, I always said we weren't going into recession, but nobody listened to me except for maybe my wife, and even she didn't really care for what I had to say. Maybe my dog. But now I'm on track. It's not going to be a recession. Why don't we go to Alex in Florida right now? Alex.
Yeah, hey, Jim. How's it going?
Not bad, Alex. Thank you. How about you?
Doing well.
Okay. It's good. Good conversation so far. What's up?
So I just wanted to get a general sense of how you feel about Pacific Gas and Electric right now. With Baupost betting on their insurance claims. Overall, what do you think will happen with their bankruptcy?
A wise man, Alex. A wise man once said that the greatest thing about stocks is that they stop at zero. Do I need to say more? How about Leon in Pennsylvania? Leon!
Good evening, Professor Cramer. Booyah.
Thank you for giving me tenure.
My question is about TEL. I've been buying the stock since the CEO was on the show last.
Yeah.
And right now it's down today, and I'm wondering, buy, sell, or hold.
Oh, I think it's fine. I mean, we have a surfeit. I did that from the SAT of nat gas in this country, and it's really, really low. And, here we are. We're betting with Sharif Suki. So far, so good. Just remember, it is a long-term play. Okay, these obstacles right here are typical of what drives the bull higher. It's all this skepticism. We've overcome all of these. Oh, Mad Money tonight. Is China behind the strange strength in this market? I'm going to give you my take after recent action. Then, has Wayfair lost its mojo? With the stock down more than 50% from its all-time highs, I'm breaking it down. And it's the company behind the brands of Mashable and PC Mag. And it just hit a 52-week high, and I think it's going to go a lot higher. But you never even have heard of it. I'm sitting down with the under-the-radar online media and cloud services play, J2 Global, to see if it's worth owning here. I suggest that you stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.